It does take us to our talk of the tape, whether an opportunity to buy stocks is now upon us, or at least getting a little closer. Let's ask Chris Harvey. He is the head of equity strategy at Wells Fargo Securities, with me here at Post 9. Welcome back.
Good to be back.
All right. The headline here, for me anyway, is that you haven't touched your target on the S&P.
No, we have
which
not.
was the highest at 7,007.
That's right.
Why do you still have the conviction that we can get there?
We have more or less 10 months left in the year. By the end of the year, we can see the Fed cutting rates a number of times, inflation coming down, being through with tariffs on Canada and Mexico, having a recovery, and M&A activity starting to pick back up. So just because things are difficult right here, right now, doesn't mean we're not going to have a good second half of the year.
So you're trying to see the forest through the trees.
We are. We are.
The trees, though, might get cut down in the near term, it feels like. How do you feel about more tactically, more near term than looking out towards the end of the year?
So it's a little ugly, as you've seen. What we think in the short term is most of the de-risking we think is done, right? One of the key indicators for us is that small caps outperformed earlier this week. That's a good sign you've had a significant amount of de-risking. Conversations have indicated a lot of pain, a lot of de-risking. And so we think there's a balance, but it's going to be very difficult for the next couple months, probably until middle of the summertime. And what we want you to do is we want you to stay in the game because you don't know when there's going to be a surprise. Hedge with some sort of low volatility and look for your good risk rewards. But it's not time for cash and can goods.
This was like a perfect storm in terms of how concentrated a whole bunch of different cohorts got. Multi-strats, we talked about that.
Right.
Long-only hedge funds, we've talked about that. And then, of course, retail.
Yep.
All of it unwinding at the very same time, which you think led to a fair amount of the volatility. Is that fair?
Yeah. Everyone's crowded into momentum trades. And that, you did see that unwind on the hedge fund side, on the retail side, to a certain degree the long-only side. But the good thing is, those are not the only games in town. Europe is doing better. Value is doing better. Low vol is doing better. The S&P equal weight is doing better. So you now have options. But yes, we had a massive repricing of the momentum trade. We had a massive unwind in de-risking. And there was a lot of demands for liquidity, which pushed things down below levels that they probably should have. We'll get some relief now, but that doesn't mean we're out of the forest. You're right. We're not out of the forest. We're not in a clear. But you can trade these things. And if your portfolio wasn't doing very well, take the strength to reposition to some degree.
Well, how do you view the mega cap stocks now that they've had this reset? Yeah. Which, by the way, now trade at the lowest valuation premium to the rest of the S&P in many years.
So our answer is not bad. We've been saying that the technicals for a lot of the mega caps look attractive. We still love the communication space. Meta is within the communication space, one of the groups that we like, and it includes Meta. And so what we would say is some of the pain that you've seen, some of the unwind, I think was unjust, and these things can bounce in the short term.
What happens if we actually have a recession? Right? I mean, we were 22 and a half times, which many people, I think you probably included, at that time said, you know what, a little rich.
Yeah.
Not necessarily justified, but earnings look pretty good, so maybe it's going to all work out.
Right.
Now we've come down to maybe a 20 multiple in the upset that we've had. But what actually happens if we do have a recession?
So we have to talk about what kind of recession that is, right? People think about recession, they think great financial crisis, they think early 2000s where balance sheets were upside down and backwards. That's not the case in the financial space. That's not the case on the consumer. It will be difficult. You'll see stocks down another 20%. But I do think it's more of a buying opportunity. You're going to see the Fed step in. And ultimately, we don't think we're going to be dealing with all the tariff noise in 12 months from now. And so, yes, it will be difficult. And that's why we say now is not the time to be a hero. A good portion of the portfolio should be in low vol or risk aversion, right? You should look for those good risk rewards. And yes, recession is there. But I think it's still, for now, a long shot.